Hello, fellow traders. 'Tis I, the Rumpled One. It is Monday, April the 23rd, the year 2018. Let's talk trading. Buy zone questions and answers. I've had a few questions recently about the buy zone. So we will definitely get to those. But before we get to those, questions, let's just remember money and risk management, how we must always remember and focus and use it, apply it, employ it. There's just no getting around it. Okay, quick look. Did anybody take any gap fills? There's only one that hasn't filled, and that's the pound, or I'm sorry, the dollar yen. Funny how I have the chart on that one since I like trading dollar yen. But the rest all filled. So I hope those who tuned in yesterday took advantage of the opportunity. And here, when we drop down to the daily, we can see a breakout here. Right now, price is 56 pips away from the high. So I don't know if anybody took that simple breakout there. That's a wick zone trade or daily previous session extreme breakout trade. But there you have it. It's right there. The old Harry hindsight. Okay, but let's look at the buy zone. Okay, here's the questions. Traders want to know if they go long here, they buy in the buy zone. Do they stop out when price crosses the open, or do they put their stop when price gets into the sell zone? The answer is yes and yes. Now let's just look at this chart right here, and maybe we'll go through a few other pairs, or maybe we'll just look at them all, and let's just see what makes sense. In this case, if you went short and then you stopped out here, you were down. You lost 10, or you lost 20 if you stopped out here. So you can see in this particular case, you just weren't going to win when you went short. I mean, unless you took maybe a pip, a few points. You were fading the pivot, but price reversed and never came back. So that's a losing trade. So the question is, where do you stop? Well, let's say if you trade whether it's two micros, two minis, or two full lots, if you go in here, then you might want to stop there if that's what your risk says. Now, if your risk says getting a little tongue-tied this morning, that you can stop out here, then that's where you place your stop. So let's just say you trade two minis, and you want to have a $20 risk. So if you enter here, two minis, there's your stop. Or if you use one mini, you can have a 20 pip stop. That's all back to the money management, you see. Once again, it gets back to the money management. So let's look at the other side. If you went long here, or let's say you went long here, okay, once again, very little action. You would have stopped out if you went short, or if you put your stop here. If you had your stop here, it would have paid off. So, there's a lot of wiggling in here. So even though you could put your stop here because if price could just keep going like that, but in this case it didn't. So to me, that's why when I first started talking about the buy zone, I never said anything about stops because it just seemed obvious. If this is where you buy and this is where you sell, and you buy here and price gets here, and if you hadn't bought, you would be selling, then since you had bought, you should be stopping out. I mean, it's just obvious to me. Maybe it's not obvious to you. On the other hand, if you're selling here and price is now telling you to buy if you weren't in a trade, so price is telling you to cover your shorts and stop out. Like I said, to me, it's obvious. Now, there was some discussion on a forum that they thought this second line here and this second line here, 10 pip away line, they thought that was the target. No, that's not the target. Anywhere between +8 and +10 is where you want to enter the trade. And then the target is whatever you want to take. And I had said in the buy zone manual that I wrote decades ago that when you first start, try just to grab like 3 to 5 pips. Just get good at it. Just get good at taking 3 to 5 pips. And then you can see, so here, if you took your 3 to 5, it would have paid off. But then you go, now this is where Harry's hindsight comes in. Yeah, and then if you would have bought in here on a red H1, then it reversed and you would have made all this money. But that's not the way you want to trade. So here, what you really want to do is, if you're a beginner, you just grab those 3 pips. I just want to get you used to it. Now, if you've got the discipline, you put your trade on somewhere from here to here. You set your stop loss, and then you just sit back and watch. Because you see here, you never even had a chance to get your 3 pips. But so here's one loss, okay? But this is basically you want to come back in. So right here, you would have bought, and then you would have more than made up, either here or here, you would have more than made up for that first initial loss. See, that's kind of the beauty of the buy zone. But that's Harry hindsight. That's just looking at one trade. But let's just look here. What happens here? Profit, okay? Let's look at the CAD. Okay, there's a chance for profit. Let's look at New Zealand dollar. There's a chance for profit there. There's a chance for profit there. Once again, Harry hindsight. You see here, even these trades produce a chance for those 3 to 5 pips. So how would you know? When do you know when to take the 3 to 5? Well, I mean, you know, you can see that it's making what? Lower highs. So if you entered this trade, then it kind of went there and then it went here. It's like then it drops back down. Well, guess what? Take those 2 or 3 pips. Once again, you get in the trade and you see right here it drops below this. You take your 2 or 3 pips. And you can see right here, once again, price goes up, comes back through, turns green. You take your, I don't know, how many pips? Oh, take your 15 pips. So that's how you make that trade. Let's look at another pair, okay? New Zealand yen, you see right here, it just went way up. Right here somewhere, let's see, it dropped out of that wick zone. It turned red. You should have been taking profit somewhere between here and here. Just take the profit. You'll get another chance. And you can see here, it was dipping back in, but it wasn't a green H1. So if you want to really follow the rules, you know, but you could drop down to M15 or M5 and go on a green candle that way. But once again, this is all buy zone. You can see here, there is money to be made here. This is not a true buy zone trade. That's not one right here. Once again, money to be made. Time to scratch that trade. And you can see here it went up. Still hasn't crossed the open. Goes up again. Right there, you'd want to scratch the trade with a couple of pips. Usually scratches, you know, just make a few pips. New Zealand franc, once again, it looks the same. Here's your opportunity right here to take some pips. Now, what you could say is, well, if you're here, why don't I move my stop up to here? Well, just take the pips. don't try to be fancy. As you can see, there's plenty of trade opportunities. Once again, you see these New Zealand pairs are pretty much behaving in the same way. Here's a short. Okay, you got in. It came back up. You're out. You got back in. You could make the money back and another opportunity to make some more pips back. So does it work every time? No, it doesn't. Let's look at the pound dollar. You can see here, buy zone opportunity. Okay, sell. Whoops. You take a loss, come back in, get it back, and then some. I hope you can see that. So right here, if you're in the trade, you can see here it comes back, tries to push up, comes back down. That would have been where you take profit, but you can see that candle didn't pull back that far. This one went down, but right there it turned, pulled back into the wick zone of the previous H1. Time to take the money off the table. See, the buy zone isn't about being greedy or hitting a home run. It's about hitting singles. And here, pound, New Zealand, you had one opportunity. You either got it or you missed it. Here we go. The pound yen, you can see here it was choppy, but it paid off here. And that's the only true, you only really had this one here, this one, because all the rest of these are wicks, and that's red. Now, that would be for advanced traders, coming in on the wick, but we're not talking about that. We're talking about the simple buy zone trade. We're going to keep it simple. Pound franc, here we go again. Opportunity, take your profit. You see, I hope this is clearing things up. Let me just hit a few more pairs before I run out of time. Okay, there's an opportunity right here. Time to scratch the trade if you were in it right there. This one up, and you can see here, right there, there's that highest, there's a wick. You can scratch the trade right there. It doesn't have to be the previous wick. Look all the way back across and see and pay attention to the price action. And here, a short trade paid off as usual. Euro, yen. It seems like I'm repeating myself, but you can see here, nice profits right here. Get in that trade, and there we go. Let's see what else. Australian dollar. Okay, you're in. Okay, boom, you lost, but that's okay. Profit. So hopefully that clears up the buy zone questions. I hope it does. And you can see rat zone opportunity will be coming up later in the day. It went from the open and it's already past R3. Looks like it's heading towards R4. Price action, just green at the line. Nothing complicated. You can see here, crossing these lines. If you were in on the last cross and still in, there's money to be made, but chances are you may have profited, taken the profit right there. Why? Price goes up, comes back into that wick. Then again, if you're doing another trade, if you have that strong, long, bullish, you buy the pullbacks and you profit. Wick zone trade, in and out, out and out. Holo, we'll look for one in the future. You can see the price action here. But fellow traders, I hope that clears up the buy zone. If not, keep asking questions and I will answer. And just remember, it's not what you trade, it's how you trade it. The Rumpled One, draining the banks.